So, we have just ended 2023, and we're here to summarize both the fourth quarter, but also the full year. How would you elaborate on last year and last quarter?
Well, I mean, 2023 was a very tumultuous year, externally, and we are not immune to that. So from an overall environment, when you look back on the year, you see continued geopolitical issues, not only the continuation of the issue in Ukraine, but also the geopolitical issues in the Middle East with Israel. You've seen several bank failures, some of the largest in decades, the largest increase in inflation since the 1970s, and also the largest increase in interest rates in modern history. And despite all that, the economy continues to chug along and the markets continue to chug along. Within that external environment, which was incredibly volatile, we've also endured a lot of change ourselves. I came in summer of 22, but became permanent at beginning of 23. So this is my first full year as the permanent CEO. We made significant management changes. More than the majority of the senior management is different. We had a strategy and priority shift. We are now leading with servicing. We are cutting back our investments. We are de-risking and deleveraging the company. That was not consistent with how the company was moving in the prior years. And it impacted the organization, of course. We also are tactically cutting costs, trying to be more efficient. And ultimately, we made 4 acquisitions. 2 market acquisitions, which gave us leadership in Spain and UK, and 2 very important technological acquisitions in Ophelos and eCollect. Within all of this also, we are already starting to see in the fourth quarter, back to your main question, the fruits of the labor. We're seeing the cost cutting coming in. We're seeing the focus on servicing, benefiting our top line and our bottom line in servicing. And I think we ended the year in the best possible place to enter next year with an ability to not only continue developing the company, but also delivering on some of these measures.
Great, and earlier this week we announced the asset sale to Cerberus of 11.5 billion Swedish krona. It's part of our objective to become more capital light. If you talk a bit about the benefits of this transaction.
I mean, this transaction has several dimensions, all of which I think are beneficial to our goals and consistent with our goals. First and foremost, from a financial perspective, what we did is sell assets and forego future profits on those assets in exchange for liquidity today. What this does is it fulfills the promise we made in September at the Capital Markets Day to be able to, between this liquidity event plus our organic cash flow, meet all our maturities over the next 2 years, 24 and 25, which total 20 billion SEK, without the need to refinance, without the requirement to have access to the market. It doesn't mean we won't access the market, but it means we don't have to access the market. We're not dependent upon accessing the market, which is an important element of not only deleveraging, but also de-risking the platform. That's the financial sense. In addition, there's 2 very important strategic elements or benefits for the company. Second, it's an endorsement of Intrum, not only the value of our assets, but the expected remaining collections curves underlying these assets, because we got a price very close to our book value. And also, the entire perimeter is being serviced by us. So Cerberus, who is already a large client, is giving us even more business, is depending upon us for even more of their assets to be managed by us. And it's an endorsement of us as an investor on how we've managed and underwritten and managed these assets, as well as us as a servicer. The third element is related directly to our strategy. This accelerates our strategy significantly. We've taken 11.5 billion of assets that were previously 100% owned by us, 100% funded by our balance sheet, and we moved them into third-party servicing. We are retaining an interest, a minority interest, but it is majority owned by a third party. It becomes now third-party client servicing. And it is a first step towards a capital light world, where we do still originate and invest in assets and manage assets, but primarily funded, not solely, but primarily funded by third parties.
And then coming back to the strategy that we laid out in September at the Capital Markets Day, this is very much on the theme capital light. In terms of client focus and operational excellence, what other progress have we done?
Operational excellence is the underpinning of everything, because what we do, we have over 2 trillion SEK of assets under management. We have over 80,000 clients. We collect over 100 billion SEK a year. That is what we do from an operational standpoint. We do that on behalf of clients and on behalf of our own capital. We need to be more efficient. We need to be more effective. I recently met with all our operational leaders. We have an objective of materially increasing our collections rate, materially lowering our cost to collect, which will then not only improve our delivery for our client, but also improve our profitability from those activities. That means focus, That means process management. That means inclusion of technology. We made two very important technology acquisitions in 2023. Ophelos, which is an AI debt resolution platform, and eCollect, which is a purely technology-based invoice services and reminder services platform. We're going to incorporate those. We need to automate more. We spend a lot of time taking a lot of actions. Our actions are up to almost 160 million actions, collections actions a year. We take a lot of time to complete those actions. We need to look at those that are simple and automatable and free up valuable human resources. We have 6,000 people in 41 call centers. We need to free up their time to do things that are more valuable and automate things like calls under 3 minutes or simple emails. As we do that, you're going to see our cost to collect to come down, and you're going to see our collections rate go up, both of which are moving in the right direction for us to benefit our clients and ourselves. So operational excellence, and we made a change in the last year on that, putting Annette Kumlien as our COO, and I see 24 as an important year where we're going to continue advancing that. I see 24, 25, 26 as the period during which we're going to completely change the way we collect to the benefit of our clients and also to the benefits of our bottom line. On client centricity, we also named George Georgakopoulos the head of servicing in 23. It's already paying dividends. We had a record commercial year, double on a net basis, 50% up on a gross basis in terms of new contracts, 23 versus 22. The margin is materially higher than in the past because of a consistent focus on profitability and delivery across and an underwriting at a centralized level led by George. And I think we're going to continue to see top line growth and margin expansion as a result of these efforts into 24, 25, and 26. And one of our major goals, which we, and targets, official financial targets over the next 3 years, 2 of them are related to servicing. 10% top line growth, which we're achieving, and getting to 25%. We are not at 25%, we're in the high teens. That is one of the goals we have, that is one of the challenges we have, but I'm confident we're going to address it over the next 3 years. So that gives you a complete picture. I talked a lot about capital light in the context of the service transaction, but there's also operational efficiency and client centricity. Those 3 pillars underpin what I believe to be long-term successful picture for Intrum.
You've talked a lot about the future now, but what else can we expect in the coming months and years?
I think you'll see continued progress, and it really comes down to people and purpose, and then also priorities. And so on people, I continue to be impressed every day. We have 10,000 people in 20 countries. I visit every single market, almost a market, different market every week. And I continue to be impressed by the energy, the commitment. And I think that's partly because of our purpose. Thankfully, in the last year, during 2023, we helped more than 5 million people become debt-free with us, and largely speaking, become debt-free and also reintegrate into financial society. This is an important part of the why, of why people get up and work at Intrum, why people like working at Intrum. Every one of the 30+ million cases that we deal with to collect has an individual behind it, an individual who's fallen on difficult times and who we can assist them in getting up from this setback and reintegrating and kind of coming back from this, from what is a very challenging situation. To me, that's incredibly powerful. Within that, and I think you see it in the motivation of our people, and without people, no technology is going to replace people. At the end of the day, we deal with clients who are people, we deal with customers who are people, and our people use tools like technology to give better service to both clients and customers. Then it's priorities. So we need to balance over the next 2 to 3 years, hitting our targets, but also developing, continue to develop. It's a balance of delivery on our targets and delivery on our financial performance, which you cannot take your eye off that ball, but at the same time also continue to develop. And I think there are years which are more development and less delivery, and more delivery and less. We need to balance these over the next coming years. But I think we will, and I think we'll hit our targets at or sooner than we've stated, and we are setting ourselves up for a foundation to continue to be the leader in this space, which is a more important space as time passes on, for many, many years to come. Not just the next 3 years during which we have financial targets, but many years beyond that.
Great. Thank you so much, Andres.
Thank you, Anna.